fine, because in the marketplace, some people would say yes, absolutely. But from an odds perspective, more times if you look through history and test this thing out multiple times, you'll find out that this pattern, we call this a pattern, it's an overextension way, way, way above, more than not. Doesn't keep magically going up. More than not, it comes back down. That's where we'll buy it. Not at the way, way, way point. It isn't really scientific, but it's at the pullback. Correct. So this is buying low. We've heard that how many times, buy low, sell high. Buying low in this case means pulled back to a rising trend line. That's how you quantify the word low. It is better to buy stock on a pullback in an uptrend than just randomly picking, okay, boom, here I am, long. Or long means to buy. I'm long the stock. I own the stock. I've bought the stock. If it's too far above, it doesn't mean it will come back. It just means that it's too risky. It means that it probably will come back. And if it does come back, pull back or trade lower, then you will lose money. That's not what we want. That's risky. So again, if the stock is coming down, trade lower, price is falling, people are selling, taking profits toward your trend line, keep it close. Put it, on a watch list, write it out, print the chart out, and say when it hits this particular price at this particular day. You can't tell the exact date or the day, but go ahead and wait for that price to hit that level. There's different programs you can use to set watch lists. Some of them will actually text message you to tell you, hey, your stock is at your level. Go ahead and buy it. And that's kind of cool. But we didn't have that. Sometimes they email you and all that. So when I started, that didn't exist. There are actually many advantages. We won't go into all of them, but that's pretty much keeping it simple. That's what we're doing. Let's talk about the exact moment. Did you know there really isn't an exact moment where it's perfect, where all the stars align and all the planets come together and all that kind of fun stuff? It just doesn't exist, unfortunately. You're either going, and you have to decide whether you're going to be an early buyer. This is the perfect spot when it touches that trend line, or a late buyer. You have to make the decision and do that consistently. So if you're an early buyer, this means, and we don't know, if we kind of put it here, we don't know what's about to happen next. This is a stock trading up and trading down, and it's hitting that trend line. We don't know what's going to happen next. Probably, if history is a guide, it will trade up off the trend line. Okay, this up pathway. If it falls under, I'm not going to get ahead of myself, but we'll talk later about how to sell a stock. This is your breakdown or sell the stock pathway. Let's not talk about that right now, though. We want to buy. So if you, again, set your alert when it comes down and touches close to or at your trend line, you would buy the stock. It really is simple as that. And Jeffrey will talk later about execution and orders and how to use the platform and all that. But and this is the thesis or theory of how to do this. This isn't going to happen, your actual exact spot, unless you set an alert. And this is after. As it rises up off the trend line, there are advantages to waiting. Why are there advantages to waiting? What happens if the price hits a trend line and just shatters it? We lose money in that case. It's sometimes you have to make your own decision as an investor to wait for the price to touch the trend line and then start rising up. If it rises up, it has actually better odds of keeping rising higher.